Well, good evening, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for the evening of Thursday, the 24th of April, 2025. And wow, FOMO took over today. The fear of missing out. You know, traders are sitting here after this break trying to figure out, where do I get in? Where do I replace stocks that I might want to dump on this rally with it? And gee, I don't want to miss out on it. And the market takes off and everybody gets scared. And that's exactly what I think. Doesn't mean I'm right, but what I think took place today. Because when I looked at the fundamentals, earnings and the like, I didn't see anything there that warranted getting nervous about the market taking off. We still have no satisfaction. Are the Chinese and the U.S. talking to each other? The Chinese say no, the president says yes. I think there's a lot of frustration in the White House between Russia and Ukraine, not able to make a deal. And I just question if the president's going to be able to drag that one over the line. We haven't seen anything in positive taking place between Hamas and Israel. And as much as the president says he thinks he's making good progress with Iran, I haven't seen that turn into a deal where they're giving up their nuclear capability. So there's a lot of talk, there's a lot of hope, there's a lot of fear, all taking place in the market at the same time. Because remember, the president did give a grace period for the tariffs that he put on, and each day that clicks by without a deal from somebody happening, somebody's got to have a calm head and say, why aren't we seeing a deal made with anybody at all? All I keep hearing is we're talking, where's the deal? And at the end of the day, that's important. Before we go to the chart action, University of Michigan, final April consumer sentiment numbers, the only economic data tomorrow. It's not a major number. We'll see what comes out. You know, today you had existing home sales, and you saw that they weren't the best numbers that you could have had one way or the other. Mortgage numbers are falling a little bit. We've seen that. They are under 7%. You had more of a rally in the gold, and at the same time, a good rally in the stock market. What's going on here? Generally, they don't go exactly like that. In fact, if you'll remember, the stocks have been cracking down, and the gold went up for a new all-time high. So is this just a correction in the gold? We're going to cover that in a moment here. Just about everything went up. Netflix again, up $50 almost. So that 1100 zone, you're already there. When I look at where we're at, AMC can't move, not worth it on these markets. NVDA up only $3, didn't move all that great either. Uranium, okay, up off the $22 mark. I was looking at other uranium stocks themselves today to see if they've made a move, and they're acting better than the URA did. I will give it credit for that. Microsoft added $12 back today, which is encouraging. So let's take a look for a moment and see what's going on. As a chartist, you've come off the highs, the all-time highs in GDX. The market dropped down. It's filling a gap. That's all that I'm seeing on this chart. The pattern is one of a higher high and a lower low. You've stepped out of the uptrend as far as I'm concerned. I still continue to believe this market might be headed back to the 47, 42 level, which is the 18-day average of closes. It's only $2.50 lower from here. It's not that far away. Do I think you're just going to go up and make a new high right now? No, not off this pattern. Could it? Of course. Just because I think it doesn't mean that's what's going to happen. And I say it for a reason. You've lost the upside momentum. And in order to regain that, you'd have to rebuild the whole slow stochastic reading. And when you lose it like this, it is not uncommon for the momentum to be ahead of price, sometimes by a day, 3 days, whatever. But that's what I'm counting on it to do. Is any of my work saying to be short up here, in other words? No. No, that's not what I'm saying to you. I'm saying not to be long. There's a huge difference between the two. Here's a market that tells you it's bad. O'Reilly Automotive. You get a market that around it, everything goes up and it can't. Not a good market. Probably dump it, won't want to watch this much longer. Home Depot acted good. The market's still not trending. It's fighting a battle at the 18-day average, and it's been doing that since the beginning of April. If you really look at it, it had that early down the first week of April. It then got back, and it's almost fought at that 18-day average every other day of the month, and that's important. Can it lift itself from here? Well, it's already overbought. Overbought markets, to me, are a flashing signal not to deploy more money on a bull side. So that's how I use that. Google, I liked what Google's numbers are. I like its business model. It came out with earnings today. I liked what I saw there. They've got good parts of the company still going. So we will see if they're able to do anything with it on pullbacks. First of all, is this chart screaming buy me or sell me? Neither. It's screaming don't get involved. The market's got a higher high, lower low. It's overbought. It's caught between the Bollinger Bands, not really doing anything. Netflix is trying to embed. It's trying to say maybe a 1,200 number could be there. Now, it's getting so rich already that you've got to be a bit cautious on it. As good as their story is, it's just like when NVDA got up to crazy, $150 a share recently. There's a point at which reality sets back in and the PE numbers start coming back to reality. This is on a heck of a run. Would I ever tell a client of mine, if they call me, talk to me, and I do talk to them, hey, I want to buy the market here over the Bollinger Band. All you're going to get from me is no. And they'll say, but it keeps going. Then buy it. What can I tell you? I wouldn't. You asked me for my opinion. No. Is the trend up? Absolutely. Robinhood. This proves a lot of those analysts wrong. I think that the analysts missed out that the Robinhood client is probably 30 years old or so. I owned a brokerage firm, a stock firm. So we used to see the ages. Who were we advertising to? We were a discount firm. We sold out many, I'm going back decades ago, to one of the large banks. But to make a long story short with everything on it, you got to know your clients. These clients are social media buffs. And they just go in and they trade. So I don't buy the old school that, Robinhood's made up of just a retail client and they won't trade. And I think that's what this rally's about. The volume is still very good. The mercantile, Chicago Mercury showed you how good the volume is. They had their earnings and they told you what they're buying back and the new products and how the trading is going. In XOM, I'm not enamored with it. I think you just had a bear market rally into the 18-day average of closes. I'm going to repeat. Why do I want to own energy companies if we're in a slowdown? I have not seen anything to tell me other than a prayer and a hope that we're going to be able to get out of this tariff war that the president started with deals. Show me the deal. There is no deal. Show me that we're really close and we're going to sign. The only one that says that is the president, and that's not enough for me, all right? I want to see a deal. How hard could it be to make a deal? Stocks, lower low, higher high. So I'm covering this as one of my clients thought this market could be bottoming, and he's on to something. Certainly this pattern is one where you've broken away, and you did this back here. This flushed out the market. You came down, you couldn't break through this low again, and now you've come back over the 18-day average. But you're in the early thralls of it. Do I think you're going to pick up and run up here? I do not, all right? So I just think that the market here is in the early stages of doing that. In the service sector, here too, you've got a lower low, higher high. The market's got to prove that it can run now. If these markets start failing back, let's assume they, as a group, take out today's high first and then reverse and take out today's low, everything you've just built is out the window again. And I'm fearful that's the game. But let's assume that's not here the case. You're overbought. I don't see a trend. I see a market that's now gotten back into this trading band right here that you can just carry right through. That's what you've got, with a lot of resistance at 49, 42 to 50, 56. In XLI, same thing. The patterns are all the same. They're lower lows, higher highs. Now, they could convert tomorrow into higher lows, higher highs, but they'd all be in overbought territory. I went through these charts today and I was amazed. It's chart after chart that's going to be overbought. If they want to convert next week and get embedded, I'm interested, but not here. I still view this as the rally that you rotate out of things you don't want. Same thing in energy. All you did is rally to the 18-day average, and you've gotten rid of the oversold condition finally. In the gold market, when you lose an embedded reading, and did you lose it? So let's go back and count today. Here's the market under 80, but not under 79. My rule is very clear. You got to be under 79. You didn't do it there, and all the rest were embedded. You didn't lose it here either today. You've got a 79.36 reading. So overall, the market's still, I think, trying to fill a gap up here that could find the market settling back. You've got to be a bit careful in this market. In SLV, we're looking at lower lows, higher highs, overbought. So the metals, there's no question, they're over the 18-day average, and they're making a move. Is that in line with the stock market move? I've got my doubts. I think it's still people fearful in buying other things. Copper is the only one that I've shared with you that all the numbers I'm looking at show China is really using a lot of copper right now. So as they go out in the world and they try to replace the 16% of their total business of everything they sell, I guess that's about the number that the U.S. does in other places, those places better be ready for dumping because that's exactly what they have to do. They're going to make products that they can even lose money on, they dump them. And you're seeing that. So however high it goes, terrific. It is in an uptrend. Support's back at 36.13, about $3 lower, and you're now entered the zone where I think it should have problems from right here, 39.52, right on up to the Bollinger Band near the 4,100 level. In BND, the trend is up at this point. You'd have to come back through these lows to hurt that. And the battleground's the 18-day average at 72.82, and you've been there for the past 48 hours. Dollar index getting a short covering rally. It did lose its embedded reading. It's got a reading over 21 for the first time. So unless it closes tomorrow back underneath the 20 level, be careful. This market can give you a little bit of a bite and lift itself a little bit higher. If it gets back under the 20, it was just a false move to the upside. And in the euro, as you can see, you're stepping in and you lost the bullishness here. So they're flip-flopping in each other, trying to go the other ways. These are both signals to not be short the dollar and not be long the euro as of the close of business today, and we can take a fresh look at what they do tomorrow. I want to remind you, you can go to our website, take a look at the free offerings we have at iraepstein.com, free offers, and I'll be with you first thing in the morning on Friday. Have a great evening.